Valora is the easiest way to send, swap, collect, and grow your crypto on the Celo blockchain. Download the app and start exploring dApps like Good Dollar today at valoraapp.com/empire. Welcome back to another roundup on Empire. We've got Santi and two special guests joining this roundup. We have David and Ren from the Blockworks research team. So Santi, how you doing? Ren, David, how you guys doing?
Hey, Anna, doing good. How are you?
We're good. We're as good as we can be in this market.
Good. Santi, how you living?
Feeling good. I'm still processing the regulatory pod that we did, and there's a lot of thoughts that we came out of that. So that's going to drop probably later this week. So yeah, it's always really good and encouraging to talk to real experts, because there's a lot of FUD these days on crypto Twitter. It's also maybe it's the Twitter feed, but my Twitter feed's just gotten really bad as of late. The For You
it's
tab,
so dark out there. It's
dark, and the algorithm is like, God, like someone has whoever's punting AI, like, my God, go look at the For You tab and really seriously think if this if this is the future of AI, we're doomed, folks. Someone was thinking about writing a script so that we totally don't see the For You tab and just go to the follower tab. So anyways, if someone out there has figured this out, please, I'm in a dire, desperate state at the moment.
I'm with you.
Anyways, I'm otherwise feeling great.
Yeah, I'm feeling good too. By the way, we got a lot of messages after last week's roundup, which was seemed like kind of a bearish roundup. We're talking about Binance, Coinbase, and I will say, I don't know, I'm feeling uber bullish this week about things. It feels like we just hit that part of the market where anyone who is not completely locked in on crypto is gone at this point. There's no one remaining who's not very, very, very locked in. And what that does actually to the market and to startups is focus is at an all-time high. So the way I'm feeling right now, price is at an all-time low, focus at an all-time high. And it's really cool.
Prices are not at an all-time low, sir. I just need to clarify this, because sentiment when ETH hit
prices are actually up 100%.
Yeah, let's just reframe it's important to say this, because when ETH hit 1,000, it felt like the sentiment was much more positive than what it is now. And I'll tell you why. Because the market is rallying. The broader market is up, and nothing hurts more than seeing this uncorrelation where everything is ripping in tech land. The market's back up. Fed is supposed to come out in a few hours, presumably going to pause the rate hike. And so that, but still ETH is holding at 1750 and Bitcoin at 25 and change. That's up 65% from the lows, folks. I mean, let's just zoom out for a minute, because it's important to contextualize that. ETH can quickly go back to 1,000, and Bitcoin could be back at sub 20 easily. This is the nature of the space. And so take your wins when you can get them. And I suspect there's also a salty crowd that was sitting in cash, and nothing hurts more than seeing something rally and you're sitting trapped in cash, and then you play. So
it's the worst feeling. And the Wall Street Journal published this 4 days ago. S&P starts a new bull market as big tech lifts stocks. So we're back. We're back. And we'll see. We'll see what happens though.
Before I'm not a trader. I don't ramble about these things, but someone made an interesting observation. I think it was Sasalid said, back when the S&P is back to its pre-COVID levels in the NASDAQ, at that time, ETH was at 3,000, and ETH is not at 3,000, folks. So that's why people are hurting. And that's what, there's a bunch of traders still that are looming around, and it's people want the market to do something. And when stuff's not doing something, I've seen a lot of the commentators in crypto Twitter just migrate over and say, you know what, this market's too crabby. I'm going to go back to my roots and trade, because you see much more activity in tech land. And so anyways, moving on.
S&P's up 30% since pre-COVID. Ren, David, let's talk Uni. So Santi, you are biased here, so I think we'll acknowledge the bias, because you were Angel in Uni, I think, one of the early Uniswap.
Yeah, Parafy, we participate in the round, yeah.
Okay, so
not seed, but because it was Paradigm that did the seed. We did
do you remember the first time you met Hayden? Because my understanding of the story of Uniswap is so Vitalik put out almost this call to action saying, hey, someone needs to build this thing. I've got this idea for how it can be built, and Hayden was a developer and built this. So do you remember kind of the early story there at all?
I do. Hayden was not technical, actually, and so he took Vitalik's post and then built on it, this AMM idea.
Yeah.
And it was pretty fascinating sort of hear that. I think it conceptualized really some of the best parts of this ecosystem, which is, anyone can join, get trained. There's a lot of resources because it's open source and people are willing to help you. Like if you join these communities, like everyone has a personal story where we're very lucky and grateful. I am that along the way, so many people helped me. And so I pass it forward. Right. And when someone wants to join the space, I take time and I always, part of Empire is doing that. Right. At scale. And so Hayden like learned Solidity, built Uniswap. He was showing up to like meetups and whatnot, I think in New York, and then just built it. And this sort of really quiet time in the market where you didn't have much volume and DeFi wasn't even a term, but just he built it. And then he certainly got a lot of help from Paradigm, like Dan Robinson there, and you helped him, I think architect V2 and then V3 and then V4. So he certainly got a lot of help from Paradigm. But yeah, I think it's one of the best stories in crypto that, really shatters a lot of notions that it's really hard to enter the space. You need to be super technical. And lo and behold, I mean, Uniswap is the most widely used protocol, I think, in crypto in terms of number of users and volume. And yeah, it's a great success story in my mind. Yeah. And also particularly because the last thing I want to say is I remember looking at the round and there was a cohort of investors that said AMMs are never going to work. They are fundamentally not as efficient as order book models. No one in their right mind that is sophisticated is going to want to do this. The market is really handicapped. It's small. It's never going to get traction. And now you're in a state of the world where Uniswap, there have been days where the volume is higher than centralized exchanges. Mind you, it has a fraction of the workforce. It is highly scalable. And I think what people realize is sometimes when you come from a financial background, like order book models will always be more efficient, but you sort of like fail to appreciate that there are other things that like people might provide liquidity and be willing to accept, the trade-offs of providing liquidity because they might be indifferent between USDC and ETH or whatever the two pair assets they're supplying. It also is a good mechanism to like cost average in or out of a position. And so these are kind of the things that a lot of investors like at the time were looking at AMMs were highly critical of an AMM or even DeFi in general. And it's an important reminder when you're comparing like, a lot of the things that you're building in DeFi look and feel very similar to what exists in traditional finance, but there are new primitives that kind of expand consumer preference that you need to bear in mind that kind of opens the window here for something like Uniswap to get scale, right? And build a very successful kind of enterprise. So anyways, I'll stop rambling.
Yeah, I'm going to put this link in the show notes. It's the Uniswap history, and it's one of my favorite pieces that exists in crypto because it's just this story of Hayden getting laid off. He got his first job out of college. He's working at Siemens. He gets laid off. He messages his friend Carl, who's working at the Ethereum Foundation. Carl's like, "You got to learn how to code a little bit."
Same Carl that is now at Optimism.
Yeah, right. Exactly. So, all right, let's get into the big news of the week, which was Uniswap announced V4, and maybe Ren, if I could pick on you for this. I actually want to start with like V2 and V3 for a quick second to like determine the problem that V4 was trying to solve here. So my like left bell curve understanding of this is that Uniswap made it so that anyone could be an LP, right? And anybody could like open any sort of liquidity pool for any token. Then V2 was like, okay, maybe these pools are like more optimized for like funds to be an LP. And then V3 made some updates, and it basically was almost impossible to make money as an LP. And V4, there's a lot of problems that they were trying to solve, internalization or like leaky MEV, leaking value through MEV. The fact that like it had become very tough for LPs to actually make money in V3. But maybe Ren, you can walk us through and kind of contextualize and set us up for this conversation around V4.
Yeah, definitely. So V1 and V2 of Uniswap started off as super bare bones AMM model, where anyone can create a liquidity proof for liquidity providers to come in and provide full range liquidity. And so that basically means it supports any price from 0 to infinity. Obviously, most assets don't trade at the price 0 and infinity simultaneously, especially, for example, for pegged assets such as a stablecoin. More often than not, it trades between, say, 99 cents and $1.01. And so in order to increase sort of like that customizability and improve the liquidity efficiency, so to say, Uniswap came out with V3. Their big innovation there was concentrated liquidity, right? Now, rather than your liquidity being provided in the full range of 0 to infinity, you could choose a specific, more narrow range. And that liquidity is kind of amplified. It moves the entire reserve curve outwards and provides more liquidity for swaps that are being done in that range. That does a few things. A, it provides a much better execution for traders. But at the same time, it also vastly increased the amount of impermanent loss that liquidity providers experience. Nowadays, impermanent loss is termed as loss versus rebalancing. And I think as the UniV3 operation continued, a lot of people became more aware of sort of MEV leakage from liquidity providers. So there were a lot of MEV bots or arbitragers doing top of block sex to DEX arbitrages, or just, for example, backrunning transactions. And the thing is, neither the people making the swaps or the liquidity providers were basically making any profit or capturing any value from all of these arbitrages. So I think a big portion of V4 is sort of tackling that, right? How to increase profitability back to liquidity providers, and furthermore, basically providing more customizability for these liquidity pools so that protocols can sort of own the liquidity. We had this big notion of protocol own liquidity when Olympus Down came out during the peak of the bull market. And I think UniV4 is kind of a return to that, right? Or going back to sort of that customizability. You start off with the bare bones. Everyone got the building blocks. The way I see it is that UniV2 basically provided two things, X and Y, commonly known within the XYK sort of invariant. After that, Uniswap V3 gave one more additional layer, X, Y, and price granularity. And V4 adds another dimension on top of that, X, Y, price granularity, and now you get time granularity or fee granularity. And it's sort of these building blocks that Uniswap has been providing that basically enables all of this. And I think David would give a great rundown of kind of what the specific features are of Uniswap that have enabled this.
Valora is the ultimate wallet for exploring the Celo ecosystem. Easily explore over 50 crypto assets and 30 different dApps for swapping, sending, and growing your crypto, all from your phone. If you want to see real-world use cases for crypto, Valora's dApps page is the easiest way to access a growing list of the latest refi and DeFi applications. Discover new dApps like Good Dollar, a Web3 platform that uses crypto to generate, fund, and distribute UBI. Anyone, anywhere with a mobile phone can claim Good Dollar right now from the Valora app every single day. Good Dollar rewards can then be saved, swapped, or used to purchase a variety of goods on the Good Dollar marketplace with the potential to impact millions of people. Download the app, start exploring today. It's valoraapp.com/empire.
I think Ren did a really great job explaining exactly like what V4 is. Really, to think about it, is it's essentially V3, which is this contrary liquidity model that they created, which kind of like mimics like an order book. So it is an AMM, but at the end of the day, it really is just an order book. Because if you look at it today, the people that are really predominantly providing liquidity on UniV3 that are at least doing well and making money are professional capital allocators, just because of how complex it is. One thing that V4 does is it takes V3, whereas every single liquidity pool in V3 needed its own smart contract. V4 houses all liquidity pools in a single contract, something that they're calling the singleton. My understanding is the way Balancer works today is every single liquidity pool in Balancer is housed inside one contract. And this does a couple things. What this allows is if you're trying to do like multi-hop pools where I'm trying to transact from Ethereum to let's say ARB token, and let's say there's no ETH ARB pool. What happens today is Uniswap tries to find the perfect route optimization to go from ETH to USDC, and then if there's a USDC ARB pool, it goes from ETH USDC ARB to get you that token. Because all of these pools are housed in one transaction, this actually drastically reduces the amount of gas costs, because every single time you hop between a new pool, it requires additional computation and additional gas. So what UniV4 does is tries to optimize gas expenditure on the behalf of the user. It vastly improves multi-hop swaps from a gas perspective. It also decreases the cost to create a new liquidity pool by, like, I think I saw 99%. It also does something that is, or it leverages something that is currently not integrated in the Ethereum protocol, which is called EIP 1153, which is supposed to be in Cancun's upgrade sometime this fall. And what that is like flash accounting. The way I think about it is like flash memory for your computer. It pretty much is something where it does calculations in transaction that essentially does not need to be saved to the state of Ethereum after the transactions are done. And really what that does is just, again, optimizes gas utilization to perform like very complex calculations without actually having to incur that cost on behalf of the user. So there's a lot of gas optimizations I think that V4 focuses on that V3 lacked, especially with its additional complexity. And really, like, I think the main thing to take away from V4's announcement is this idea of hooks. Pretty much what that is it allows customization at the pool level and really just gives complete customization, like Ren was saying, especially with protocol and liquidity. It gives complete customization into the hands of the pool owner to do literally whatever they want. One of the interesting things is around MEV internalization. So I know we've seen app chains like Osmosis and the Cosmos ecosystem try to leverage its app chain architecture to actually be state aware. So it is aware of in block, like what the ordering of transactions are. And then based on the ordering of transactions, it's able to actually calculate like how much MEV opportunity is there, and then capture that MEV opportunity for itself and like arbitrage or back run its users, not front run its users, back run its users, and then provide that protocol revenue back to its Osmo token holders. What hooks are able to do is actually somewhat internalize MEV and allows like some type of transaction ordering preference. I think one of the shortcomings is because the hooks are smart contracts and are not baked into the protocol layer, like Osmosis is an app chain, so its MEV preferences are baked into the chain. Because Uniswap is sitting above Ethereum and doesn't actually own the block space, there are some limitations about like what MEV ordering and preferences that Uniswap can have. It's not fully understood, honestly, like what those limitations are yet. So I was speaking to some people in like the Skip team, which is one of like the leading MEV researchers in Cosmos, and a couple other MEV researchers. And the understanding today is that Uniswap can be like can be begin block aware, but not end of block aware. So what that means is that it can know like it'll be able to timestamp like the first X transactions in a block, but it doesn't know like the last transaction in the block, like when that last transaction is. And because of that, it can't actually optimize MEV revenue if you don't know exactly what's in a block, like the full contents. So, I mean, I said a lot right there, but I think there's a lot of improvements that V4 made over V3. It allows a lot more customizability on behalf of like the liquidity pool owners. But I think with that additional customizability comes a lot of complexity that we don't really know like what the long-term effects of that are.
I remember looking at V3 and I said, it's incredible that you can limit kind of where you want to participate in the curve. But then I funded like 2 startups that like Mello and another that would allow like for this essentially for liquidity providers. Most liquidity providers are not active and don't have the complexity and don't want to do it. And so there are services that my bet at the time was that there would be these services would be built on top of Uni. It feels like there's now an expanded possibilities with V4 to do all kinds of different strategies like TWAPing and a bunch of other things. I am curious what you think would be what are kind of the for people that are using Uniswap, right? Like concretely, like where do you see the killer use cases that are going to get the most amount of traction with this greater flexibility and customization?
I think there's a couple things. I think in general, this just kind of gives the tool. We believe in obviously open source innovation that like will lead to like ideally the most capital efficient financial systems over time. And really what this does is just put tools in the hands of the developers and the pool owners or the liquidity owners to decide like, how do you want to leverage your liquidity provision? I don't know exactly like where this is going to lead to. I think one interesting thing is that this could actually have some detriment effects where you might end up actually having like segmentation of liquidity. So you might actually end up seeing like KYC pools versus not permissionless pools, and like hooks are going to be related to that. It's like, oh, if you're not a KYC participant on chain, then you can't have access to this specific liquidity. And especially today, when a majority of liquidity providers that are profitable on Uniswap are like, I think I saw something like less than 10 LPs on Uniswap make up like 80% of liquidity. And I think one issue of that is like a lot of permission liquidity could be like, a lot of liquidity on Uniswap can be in these permission pools, and you might actually see this fragmentation of liquidity. But I think like those are major innovations. And one other thing that I thought was really interesting is that Ren talked about out of range liquidity, specifically with concentrated liquidity today. There's a lot of liquidity that sits in Uniswap that is stale and not being used, and it's just idle capital. One interesting thing that my understanding is hooks can do is actually leverage that out of range liquidity to be used in like lending markets. So what Uniswap V4 may do is not only just make Uniswap a platform for exchanges, it could actually make Uniswap like a DeFi super app. Whereas like you might take all this
greater utilize. But I thought that was possible with V3
Yeah.
where you could like you take that idle liquidity and use it in other places, and if you get called, like if it hits the range, then it gets ported back. But maybe that was a misunderstanding. But I thought V3 allowed some of that, but maybe there's greater flexibility here.
Yeah, I think that's really what it is. Because like I think Infinity pools, like a lot of other teams that are building on top of Uni V3, I think it planned on using some of this out of range liquidity to create new financial primitives. And my understanding is that Uni V4 just puts, I think, more tools in their hands to build like additional primitives and make it maybe simplify like how they actually build those primitives on top. So it really could kind of make Uniswap this not just a DEX, but like this entire super app of applications built on top of the liquidity layer that it houses.
Yeah, just to add on to what David said, there are like a decent number of protocols these days that are building on top of Uni V3, for example, Panoptic, GammaSwap, Infinity Pools. I think previously what you would have had to do was provide liquidity into Uniswap, take that NFT and then basically pass it along to the protocol and perhaps deposit that into one of their contracts, or for example, deposit your liquidity through their contract. But what Uni V4 does is allow you to sort of like abstract and simplify that process, right? Now, rather than doing all of those complex actions, you can just deposit into a liquidity pool that was, for example, designed by one of these protocols building on top of Uniswap, and that's it. All of the other sort of logical execution is handled by the hook that sort of like points to the smart contract that handles everything else for you.
It feels
What
like
happens-
they're pushing. Yeah, go ahead, Santi. Go ahead.
I was just curious, like with greater customization flexibility, you could argue, does this increase the surface area of potential things that could backfire? Like if you build a faulty hook, what's the worst that can happen? I'm curious, like, yeah, people can build on top of this, but like who's vetting, and can you create like these, if a hook were to fail or just backfire, like what does that actually, like what kind of risk does that introduce to the broader kind of ecosystem of liquidity pools within Uniswap?
Yeah, I think there are a few immediate risks that come to mind. The first of all is like a rugging risk. I'm not sure if this is possible, but for example, you could deploy a liquidity pool with like a hook that points to a certain smart contract. And then after a while, you ask it to point to another smart contract, and that smart contract has a withdrawal fee that's, for example, 100% rather than 0%. And suddenly everyone that wants to withdraw the liquidity gets rugged. I think another sort of attack vector is you're asking a protocol to develop a lot of custom rule sets and sort of logic within that smart contract for the hook. And for example, if you're asking some random protocol to build their own hook contract for internalization of MEV, for example, they want to run an MEV auction for the first transaction within their pool, I feel like not a lot of teams have expertise on that. And perhaps there's going to be a new type of business that provides a service, sort of like hook templates out there, right, for these people to build on. I think those are a few risks that come to mind. But yeah, at the end of the day, it is an additional sort of attack vector and additional layer of complexity.
Yeah. Ren, is it fair to say that Uni V1, V2, and V3 was really all about like just liquidity and trading, and now this is what we are seeing here is Uniswap making a push into developer tooling? And because like the way that you guys are describing this is it's not just, I mean, funds building on top of Uniswap now and like playing around with it, but really this is going to be a developer platform. It's infrastructure for other people trying to build trading infrastructure.
Yeah, I definitely agree with that take. I think one of sort of like the common takeaways from the Web 2 world was that everything either becomes a platform or it became a marketplace in the end. And I think we're kind of seeing that similar trend as DeFi slowly matures. Uniswap V4 is now acting as a platform. In the past, currently, rather than sort of like building your own DEX, building all of that smart contract architecture, you basically just plug and play a super easy hook contract to point towards. And I think that's something that will or perhaps would change like a lot of VC investment thesis, right? Now, rather than building your own like super cool AMM, you're gonna build your own like custom volatility fees or sort of like custom order models. Uniswap provides all of that tooling. You can build dynamic fees if you want based on volatility. You can build internal volatility oracles. You can build like an internalized MEV AMM. You can build your own custom orders with these hooks. And like David mentioned, you can provide out-of-range liquidity into lending protocols. And there's not much reason to go build your own DEX and sort of have to regain all of the liquidity that Uniswap already has. And these days, I think developers would much prefer to just go build on the set of tooling provided by Uniswap.
Does this kill the idea that anyone can be an LP in Uniswap, though? Like, it feels like these hooks are a really interesting idea and they're very innovative, but now like liquidity provisioning is just, it seems like incredibly tough. It's just not tough, but complicated, right? And so it seems like professional liquidity provision.
Sorry, this is a left curve take, which is you think that V2 was the best version of Uniswap? Because I've seen that meme, like guys like Uni V2 was the best, which is a fair statement, I guess.
Well, I mean, it's the best for what? What are you trying to optimize for here, right? And I think Uniswap Uniswap, the first Uniswap was optimizing for like this open platform that anyone could provide liquidity. Individuals loved it, retail loved it. This is moving Uniswap into a open platform that developers can build on top of. But on the liquidity provisioning side, like you need to be a professional. You need to be a professional fund to get involved here. That is my understanding. I'm curious if you guys disagree.
I mean, like it's a great point because when I talk to traditional people in finance, like I would say Uniswap allows anyone to be a market maker. The question is like, should everyone be a market maker? Like I would say most people would say Uni V2 is great, like, super simple. It still is, my understanding, it's still easy to deploy and provide liquidity. It will actually be easier in V4 primarily because the gas fees are much lower. And so that from a user standpoint, I think most people would look back and say, oh, it's just way cheaper to provide liquidity. And so it opens up the possibility, if you want to provide less than $100 of liquidity, you can do that. The question becomes much more nuanced. Sorry, what was that?
No, go for it, Satsi. Sorry.
Yeah, the last one I want to say is, I want to hear your thoughts, David and Ren, is I think most people, like, impermanent loss is an opportunity cost, and it is harder to conceptualize and track for most people. And it has been the case since day one for AMMs, and I don't think any of this changes, to be fair. But that's more of a per user kind of consideration. Some people feel it and are more sensitive to it; others are not. But David, Ren, jump in.
Yeah, I was gonna say one interesting thing that we haven't confirmed yet, but if you read the documentation for Uni V4, one of the things that hooks say they can do is it can allow liquidity being provided across invariants, and it's plural. And what that potentially means, and we don't know exactly what the implications are of that yet, like maybe Uniswap governance will have say over what type of AMM invariants are going to be allowed on the platform and can be used in hooks. So one of the interesting things, like I agree, Uni V3 today is extremely hard to become a good LP. And maybe not everyone should become, maybe not everyone is a market maker. But you actually see two different approaches today where Uniswap kind of obviously created its toolkit or its liquidity provision system in the Uni V3 specifically for sophisticated market makers. And then Curve V2 took a completely different approach where they had like passive concentrated liquidity, where liquidity every single time a new transaction happens, a user that wants to do a transaction on Curve has to pay extra gas cost for the liquidity in the pool to follow wherever the oracle price is of the pool. And it kind of shifts the liquidity for the user on behalf of them. And one of the interesting things is like, can hooks potentially allow passive concentrated liquidity pools on Uni V4? My gut says yes. So it actually serves all users. It serves the professional market makers for like the institutional, maybe KYC pools. And for the non-KYC pools, if that's even going to be a thing for passive concentrated liquidity, it really it democratizes market making pretty much for all, depending on what your skill set is.
That's a great point, David. I just want to conceptualize this for a lot of your listeners that may not understand kind of the invariant that David's talking about. So basically, you have a constant price kind of relationship, X and Y, when you try to trade an asset. What these AMMs have kind of innovated, like Uniswap created this like invariant XY that is basically, think of it like a law curve, like it just basically looks like this. So it creates just like, it depends on however amount you want to trade, it creates sort of like these ranges, right? And that was kind of highly innovative, right? When you want to trade, basically it allowed to trade a tail end of assets and you could provide liquidity on. Then you had in different kind of, so you think about the slope of the curve, that's kind of the invariant. And for instance, curve, which was an innovation of a type of AMM, it just created like the stable swap invariant was just like flatter within a particular more concentrated range. Why? Because when you're trading a stable coin, like, a type of stable coin, if it's dollar denominated, shouldn't fluctuate. Usually the vol is much reduced. So you can feel comfortable creating a flatter curve within a concentrated range where you're going to be trading like USDC with USDT as an example. And Uniswap, I think V3 allowed for this like creating kind of like the range where you want to provide, but it was still the same kind of curve. The slope was the same, but you could just say, I just want to provide liquidity. I guess my hand for people like on this range of the slope. What you're saying now, and correct me if I'm wrong, is V4 adds more flexibility because you can change the slope of the curve or just shift it. Is it changing the slope or also just kind of shifting the curve? Or it feels like I just want users to kind of appreciate what you just said, but let me know if I got it wrong.
No, what you said is 100% correct. It sounds like, and we don't know for sure, but in the Uni V4 documents, it pretty much said that you can have multiple invariants. So that tells me it's not just X times Y equals K. It's not just the normal constant product AMM invariant. It potentially can start whitelisting, or maybe it's going to be permissionless, but it's going to allow different invariants that are allowed. Whereas again, like Curve V2 and stable swap pools that Curve invented for exactly what you said before, where you have two different pairs assets that don't have high volatility to one another. They relatively fluctuate within one-to-one price variance. If you're allowed to have multiple different types of invariants depending on the pool, that obviously opens up the floodgates for passive retail users like myself, let's say, to provide liquidity, and maybe one of the pools just automatically moves my liquidity around wherever the mid price is of a given asset. So if that's true, like honestly, you're really like what Ren said, you're not going to need new AMMs to be built anymore. You can just literally create a hook that creates a liquidity pool that mimics whatever new functionality that the latest AMM to get a seed round is claiming is like their secret sauce. Like Uniswap V4 pretty much allows any pool to be its own secret sauce, and you create whatever you want.
And I am curious, for instance, when V3 launched, a lot of people saying, well, what does that actually mean for Curve? And will liquidity migrate from Curve to Uniswap? That hasn't been the case. Like, I think still stablecoin swaps, people go to Curve, or like for like swaps, you go to Curve. It has incentives, and you could argue that's, without incentives, maybe the game would be different. But lo and behold, it hasn't been the case. What does this mean for Curve? Like, now that we have V4, like, what would you say would happen to Curve and maybe other AMMs? But I'm interested particularly in Curve because Curve is just such an important piece of the ecosystem that I'm curious to get your thoughts on what this means for them.
I want to say that Curve still has its role within DeFi. Obviously, it has its whole sort of like ecosystem with V, Curve, Convex, and everything that's happening around it, especially with the recent launch of Curve USD and sort of like the Llama.
This is their stable coin for folks that don't know, right?
Yep, the new stable coin, and then Llama is their basically borrowing and lending protocol for that stable coin. And also Curve has recently undergone a slew of updates, right? Curve launched their sort of new V2 pools, and that greatly decreased the gas cost that it needed for these pools to be balanced based on the oracles. But now Uniswap has also come in with their sort of like gas efficiency improvement, right? With these singleton contracts, the cost to deploy a pool is going to decrease by 99%. With a singleton contract, multi-hop transactions will likely be cheaper too. And so I think Curve is still going to be able to compete. Maybe a lot of the investment thesis behind Curve and sort of the new like V2 pools, Curve USD and Llama, especially if Uniswap goes out and like builds their own borrowing and lending market, may be gone. But I think Curve is still the de facto home for, stable softs. And the Curve USD seems to be doing pretty well so far. There's probably around I want to say 25 million of Curve USD minted so far. And the Llama is a very innovative model that people are picking on. Soft liquidations perform very differently to hard liquidations. And for now, it just seems like a better borrowing lending mechanism for both sides of the trade.
I think ultimately, though, I don't want to say the only thing, but what Curve has going for it is that a lot of protocols are dependent on Curve's success. A lot of protocols own the Curve token. They need Curve's liquidity. And unless Uniswap somehow starts catering to individual protocols and offering some type of liquidity mining program, which I don't think is going to happen, like Curve is still going to have its use case for those specific protocols. And if those protocols end up doing well and finding product market fit, you can see Curve kind of not piggybacking off like their success, but Curve still like having a dominant market share in the industry. Obviously, Uniswap still has 80% plus market share today. But I think outside of Curve, I don't see any other DEX at least in the Ethereum ecosystem, really doing well. What's happening right now is Uniswap started with a consumer-facing application, and it's starting to build deeper into the protocol layer, and obviously offering these tool sets and becoming more infrastructure. At this point, I feel like the next obvious step for Uni V5 is to own an app chain. Like, I don't understand how that isn't the next logical step, because they can pretty much do anything that an app chain can, except they're not fully state aware from like an MEV perspective, and to do like full customization. So I feel like that has to be the next step for Uni V4. Or I mean, I can't imagine
V5,
like the next.
V5,
or V5 is, yeah.
David, I'm shocked we made it 35 minutes into this before you brought up app chains.
I was going to say, I mean, it sounds like we talk about app chains more and more. And, I agree with you, Jason.
David's our Cosmos guy in house. So David, maybe can you lay out this app chain thesis a little more and tell us why this makes sense for Uniswap?
Yeah, I think ultimately the app chain thesis is when you have developers or you have a community owning the entire stack, from the blocks to the consumer facing application to maybe even some of the middleware. Not only can you potentially monetize at every layer of the stack, but because you own that full stack, you're actually able to have like full customization of your application. Your application and your chain are actually aware of each other. So there's application specific logic that you can bake into how your chain actually comes to consensus. A really good example as to why I think this makes sense is going back to EIP 1153. I want to make sure I say it right, which is the transient storage that is potentially going into Cancun for Uniswap. So for Uniswap singleton contracts, for them to actually have like the most optimal gas efficient routing and pool creation for singleton to really be the best product it can be, it needs transient storage to be baked into Ethereum. The problem is that maybe there's some political side to this where like maybe it doesn't make sense for Ethereum to be catering to a specific protocol, because then it starts losing its credible neutrality. I'm not sure exactly what the potential cons are of including transient storage, but a few months ago when this was brought up in conversation, there were a lot of takes on why Ethereum should not be like kind of bending the knee to Uniswap as the most powerful DeFi primitive on its ecosystem to like change its roadmap and maybe prioritize one or the other. If Uniswap was an app chain and its community was like, well, we want to just build the best product, I don't necessarily care or I don't necessarily like, I want to prioritize this specific thing and I want it to be built into now because I want to make sure I'm building the best product for my users. If you own your own full stack, you can do that. You don't have to start like politicizing or lobbying for a reason why your specific opcode that you want in Ethereum needs to go ahead of others. So I think that kind of owning the full stack from a monetization perspective, from building the most mature product, I personally envision that the future of all of crypto is going to be an app chain model, because it really gives the community ownership of the application. Whereas like right now, everything that's built on Ethereum is really at the mercy of Ethereum.
I'm going to come in with a slightly hot take here. Actually, I think the V4, to me, kind of signifies that Uniswap may not go to an app chain model. The reason I say this is because a lot of the reason why a DeFi protocol will move to an app chain model is value capture, right? That value capture happens through two ways. One, either the internalization of MEV, or two, kind of turning on the fee search from swap fees that LPs currently gather. And with Uni V4, you're kind of allowing these protocols, when creating their liquidity pools and setting these hooks, to internalize the MEV to some extent, right? And that's being like publicly pushed as a narrative by Uniswap themselves, by Dan Robinson saying, hey, go and internalize the MEV, build interesting solutions to do that. And if that happens, then maybe there's not so much need for an app chain itself. Sure, there's certain problems with trying to like internalize MEV due to how Ethereum's built right now, but that's like partially being solved. I think another thing is from a value capture perspective, right? Definitely, if Uniswap wanted to capture more value, they would want to move to an AppChain model. But a lot of what Uni V4 was about was trying to provide more fees to these liquidity pool sort of protocols, right? These people that are launching these liquidity pools. Now you have withdrawal fees. Now you have swap fees, and the protocol that's launching the hook can capture that withdrawal fee. The protocol that's launching the hook for that liquidity pool can also capture a portion of the swap fees, right? If Uniswap's allowing all of these liquidity pool launchers to do that, then perhaps maybe they aren't that concerned about value capture and sort of like the whole app chain thesis.
Ren, how does this inform your thoughts on what they should do with the fee switch?
I think it makes it an even harder discussion for them because previously the only entities to decide between was LPs and Uni token holders, right?
Right.
Now you're adding an additional layer of complexity to that. I think for now, it doesn't matter that much because, for example, 50% of Uniswap volume is ETH USDC, and no one's going to sort of like get that fee assumed because no protocol like launches the ETH USDC pool. But I definitely think that basically protocols coming in, turning on their own fees are going to have to compete with Uni and the LPs. And it's hard to say. Maybe there's an argument here for protocol owned liquidity, right? For example, rather than having to pay liquidity providers, which is something that you can do these days with Uni V4 hooks, you might as well just say, all right, screw it. It's not worth paying Uni liquidity providers anything. I'm just going to do protocol owned liquidity. I don't have to tip them. I don't have to donate to them. I don't need to think about this entire like fee switch to LPs to Uni token holders. I'm just going to take everything for myself.
I kind of struggle with this idea because I think at this point, like Uniswap has such a commanding lead in the entire DeFi space, not even just DEX. Like they could easily create a lending market tomorrow, and I guarantee you it's probably going to take 75% market share. I very much think that crypto is really going to create like digital monopolies over time, just because they could really just expand indefinitely with really no limited to no friction because they're so lindy in their brands. I think that eventually a fee switch will happen for Uniswap. I honestly, at this point, don't see the need for them to do it. I like this. There's a piece that I could share with you guys called, I'm sure you've read it, the Hyperstructure piece, that pretty much you keep building until like you grow so much that the entire economy is dependent on you. And just the very nature that Uni token holders could potentially eventually like hold a fee switch, just having that power alone makes the Uni token valuable. And you can think about like Amazon shareholders. Amazon still, to my knowledge, does not distribute dividends, but the entire world economy is pretty much dependent on Amazon and their supply chain and their logistics. So like,
I mean, certainly Amazon wasn't profitable until AWS came into the
right.
fight. So.
Well, yeah, but even without that, right? Like they kind of just took this approach, and a lot of tech companies did this, where it's like growth at any means necessary. And I think with crypto protocols, you can even take that to like the nth degree. You can kick out cash flow as long as possible because these things can essentially like eat all of the financial world over time, and as long as they can scale with their users. So I think short end of it is I don't think this necessarily has any impact on whether or not Uniswap is going to add a fee switch or not. But I do like the idea that it kind of puts the ownership in the liquidity pool owners. Like it gives them the flexibility to decide whether or not they want to add a fee switch at the pool level.
Ren and David, how do you guys think about I saw some push. Here's the counter argument to all of this. Actually, there's a couple pieces, so I want to start getting into that maybe a little bit. One of them was, I'm just going to read this tweet from 0x Relativity. They said, crypto and Twitter has the most literal psychopaths I've ever witnessed. Uniswap literally just looked at CrocSwap's white paper and Medium blog post and was like, all right, I'm a Control-C, Control-V that shit. That shit looks good, with no credit to CrocSwap. I've seen some other pushback that like they basically just took the Balancer V2 model, copied it, but they've got Uniswap's brand. What's your thought on this?
I think that's the power and authority that Uniswap does have. I mean, if you're the market leader and other people have better features than you, yeah, you bet your ass I'm going to copy them. and integrate them into my protocol, and then sort of launch it as a platform model, so that I don't need to do any work. Other people will launch sort of proofs on Uniswap that mimic your protocol, and tada! Suddenly, I own everything. I think
they were on the other side of the stick with Sushi and basically every other.
Right.
I mean, and you could argue that everyone copied Vitalik's post, and God knows where Vitalik got it from. So turtles all the way down. But I think what was the concern was this idea that it's like the licensing component and whether you want to adhere to the license. Big if. But that was, I think, where people saying they are painting this narrative that is open source, but when you actually look at the license, it is not. There are degrees and types of licenses, and this is more on the restrictive side. So that is, I think, where the criticism came about. I don't know if you guys would agree with that.
I was literally going to say the same thing. I think, fortunately and unfortunately, there's it's a double-edged sword with this open source innovation. It's incredible. You speed run all of financial and technology history, like with everyone innovating out in the open. But at the same time, it allows yourself to kind of do the great work. And then I'm not saying Uniswap ripped off them or not, but rip off of great work, paste it as your own. The problem though is, well, now you're putting a license on it saying I can't actually use this innovation for 4 years. So, unlimited. Like ultimately, that's why I think crypto is going to create monopolies over time, because it really comes down to brand and first mover advantage. If you could just take an innovation from someone and just put it under the Uniswap brand, it's immediately going to be a 10x better product, not just because it's technically better, but because it comes with the brand and the overall power and clout that brand has.
Yeah, I mean, it's Lindy, right? I mean, you talk about like Sushi, like who's Sushi? I mean, Maki left, and then it's kind of like they haven't innovated. And these guys have, and I think they're always at the cutting edge of trying to innovate new primitives and expand on what they have already, which is a lot of liquidity, a lot of brand recognition, and the users. And so, it's hard to just create a fork, and then I think countless forks. Like people have tried to fork Curve a number of times, it just failed. And so, I guess more of a question to you, David, because you spent so much time in the Cosmos ecosystem. Like, how do you envision the world in a multi-chain thesis, if you believe that to be true? Like you have, like Uniswap is deployed in, like you're going to have Base, so you have L2s, right, in Ethereum, but you also have different EVM compatible chains, non-EVM chains. Like, what is the role of Uniswap here, and how does that world look like from a connectivity standpoint, and bridging liquidity and whatnot? I'm curious to get your thoughts on that.
Yeah, I've thought a lot about this. I think ultimately, it really depends. I honestly don't think atomic composability is that big of a deal. I think a lot of people thought Ethereum's like one of its main innovations was like, oh, atomic composability. You can like borrow from something and then buy something in the same transaction. You're guaranteed transaction inclusion. I actually think asynchronous composability is probably good enough for like 99.9% of use cases, and eventually we'll kind of get to atomic composability with like ZK rollups. And yeah, right. I honestly don't see the allure of, like, who cares about flash loans? Like, that's great that a arbitrager can flash loan $200 million and get a $3 arb, but like, is that really financial innovation? Not really. Just kind of like a cool feature. So I think in the short term, really what you're going to see is Uniswap is obviously deploying across all these L2s. I think ultimately the entire crypto space needs to converge on one interoperability standard. I think that is probably the major thing that's holding the L2 roadmap back. And obviously I'm a Cosmos maxi, so I'm going to talk my book. But I think the main innovation for Cosmos and that entire ecosystem was IBC. Once you have a set standard on interoperating with one another, you kind of remove trust assumptions, or at least you make it as trustless as possible. And I think there's going to be a lot of developments, I think, over the next year or two that the Ethereum L2 space is going to battle with, and they're going to be kind of going back to lessons learned from the Cosmos ecosystem. And I think one of my concerns is that the L2 space is going to get more fragmented, more PvP, and really look ultimately like what the Cosmos ecosystem does today.
I mean, people should go back and listen to the episode we recorded with Jack and Zaki from the Cosmos ecosystem. And one of the things, this is right around where they were announcing IBC and some other features. And I asked Zaki, and he said something, and David, correct me here or you believe differently, which is ultimately IBC is going to be helpful even for the Ethereum ecosystem to as a communication between L2s. And so that tech can be used within Ethereum, but also to communicate with Cosmos chains. And so maybe that is the standard, right?
I fully believe, and I know Ren and like the analyst team on the research side are probably sick of me saying this, but the industry has to converge on an interoperability standard. And today, there is no better interoperability standard that's more battle tested than IBC. And it has like the least trust assumptions possible. And there's already a lot of great teams like Polymer and a couple, I think Ethereum Research is actually funding some ZK IBC work. There's already a lot of work that's being done to make a lot of the L2s IBC compatible. So I'm really excited to see that happen, because then we actually have like a real super chain where like everything talks to one another. I fully believe in the multi-chain thesis. And I also think like a lot of communities are never going to leave their ecosystem. Solana ecosystem is probably going to stay Solana until it's actually proven whether or not Solana is like a viable product or not. Same thing with Avalanche, same thing with Cosmos. So instead of hoping that all your users and liquidity come to you, you got to kind of bridge to them. And I think like having interoperability standards is the way to do that. And I ultimately think what's going to happen is, and you're already seeing this, like Uniswap is just going to have like outposts. They're going to have official front ends on every single L2. They're going to be able to talk to each other asynchronously. But ultimately, all of that multi-chain world has to be abstracted away. And I think IBC is the best way to do that. You can actually abstract away like the multi-chain thesis so that there's one front end, and the user doesn't even realize that when they do a swap, it's routing liquidity across all these different rollups and app chains.
If you're the Uniswap BD team, growth team, then it sounds to me that what you're saying is the go-to-market should be dominate the front end, dominate the user, like brand, and then just plug in with IBC, and then just wherever they are, wherever the liquidity is, just route it in the most efficient way in an asynchronous manner for 99% of use cases. And so I guess, you know, from an IBC standpoint, like how far, because I remember like looking at Cosmos 2018, and it was like, I would be going to like the Berkeley conferences, and it's like IBC's around the corner. And then of course they had some like internal like splits and whatnot that probably delayed the roadmap, but like, how real is it? Like, is it ready to go? Like, is it battle tested enough? And an important distinction, I think it's not the same as a bridge, because bridges have gotten a lot of criticism, rightfully so, because there's been a lot of hacks and user, you know, funds have been lost. But, you know, where is IBC in your mind in terms of readiness and like building Lindy so that more and more protocols and more kind of chains are comfortable using it?
Yeah, I think it's probably, I think it's good enough today. I don't think it's obviously ready for like mainstream adoption yet. I would say honestly, within the next 12 months, though, you're going to see a lot of interesting developments of IBC that are going to really make the entire cross-chain experience, at least in the Cosmos ecosystem and other IBC compatible chains, like completely seamless. So there's a couple teams that are like doing a lot of great work, like Strangelove, which is Jack Zamplin's team, the Stride team, which is like the major liquid staking provider in the Cosmos ecosystem. They've done a lot of great work so that you can actually do like cross-chain swaps with like one click. You can move tokens, or you can move like Atom, let's say, from one chain to the other, liquid stake it, deposit it back to the Cosmos hub in like one-click transactions. So there's a lot of IBC abstraction, I'll say, and cross-chain abstraction that has been done over the past like 3 to 6 months. And I think we're probably another like 6 months away until you actually see app chains deploy official front ends on individual like generalized smart contract platforms in the Cosmos, and having that entire experience be abstracted away to be like just one front end that the user is going to be interacting with. I think it's like, I think everyone outside the Cosmos ecosystem is completely, I don't want to say ignorant, but has no idea like how far IBC has come over the past 6 months.
Well, I mean, Cosmos like no BD team, and Zaki would say like, no, we're just pure tech guys, and you're like, fair. But yeah, it's a sort of interesting state where like we are in crypto, which is people have an opinion on like VHS versus Betamax. It's like, no, guys, like no one had an opinion on HTTPS and some of these standards in the stack. Like you know what I mean? It sort of like reflects the state of the industry, which is it's these hobbyists and, you know, tech enthusiasts that have a very strong opinion and affiliation to a chain, and has sort of missing the broader picture, which is, you know, as these use cases get built out, the real users are not going to have any affiliation to Ethereum or Solana or Cosmos. All they will have they will care about, you know, the user experience, right? And if you're playing a game, and if that requires making multiple hops and interacting with multiple chains, well, so be it, as long as the game is fun to play. So not a lot of games in crypto today are fun to play, but we'll get there hopefully.
100%.
Well, this has been a very thorough discussion on Uniswap, and of course that took us into a tangent here. But I'm curious if there's anything else you guys were at, or things that you're looking for. Like, what is the timing? When does Uni V4 come out? How are people going to notice it? And how does it phasing out of, like, I guess because technically you can still use V3, or you're still going to be able to use it, right? So what does that look like for users? Like, what's the timeline here?
I want to say it's going to be a slow migration, like Uni V2 to V3. That was a slow migration. I suspect that V3 to V4 will actually be an even slower migration, because deploying concentrated liquidity pools where that complexity is just sort of left to the user to choose the range is very different from having to write an entire new smart contract, auditing that, making sure it's battle tested, making sure you've thought through the entire mechanism design, right? And I think one interesting thing that I would look forward to is where the protocols are going to build their own smart contracts for these hooks to point to, or these are going to come as like hooks as a service, right? I think not every protocol wants to spend their time thinking through all of these mechanisms, writing that additional complexity for the liquidity pools. And we'll be very interested.
I haven't checked the governance forum, but will there be incentives? Like, could you create a incentive where you get Uni if you migrate?
I don't think so as of yet, but actually, interestingly, I think around 2 weeks ago, Gauntlet put out an liquidity mining stash incentive study that they were doing with Uniswap on optimism, if I'm not wrong. And they basically did a super quantitative analysis. It showed that liquidity mining does work to some extent, and in some cases, it was fairly sticky. They did like the whole like statistical regression analysis, and from what I've heard, Uniswap has been sort of doing these experiments. So maybe that's telling of something that they may be considering to do for V4 to sort of promote migration.
Because what you don't want is for users to forget about it, don't migrate. And, look at Aave, for instance, different experience, but Aave still has plenty of liquidity on V2 than V3. You know what I mean? Like, I think it's V2, V3, V1 still. So like, if liquidity is sticky and users like sometimes are not as active, so you need to incentivize them to kind of migrate over. So Gauntlet is, my understanding, is one of the top delegates in the Uni governance committee. And so, they carry a lot of weight, certainly.
Yeah, I think one last thing that I want to sort of look forward to is how protocols will think about donating to liquidity providers and incentivizing liquidity, because now you can directly do so through these hooks. So maybe they'll think about donating to very specific in-range liquidity providers, and it'll be interesting to see how they sort of structure those incentives.
Awesome, guys. Hey, well, it's really nice having you both on. I mean, David, I think we're due for a much deeper discussion on Cosmos at some point, and so maybe you are the de facto business, BD head of unofficial BD head of Cosmos.
Chief
Chief
narrative.
Yeah, I was looking at your profile. By the way, thank you. I told Jason, wow, I so clearly haven't made it because you don't follow me, so it's great. Go out and follow David. He's a way better follow than me, and I just followed him, and so I
followed you back.
Okay. All right. Great. Awesome.
Sorry.
Not that we care about followers here, folks. I've been basically stuck in like the same number for
Santi. We're battling. You know that? Do you know that we are, I think, tied right now? Oh no,
let me go.
You're a 1014. I'm 1012.
Well, let me go. I just unfollowed you.
You want to hear a fun story? So when Mike and I were working pretty closely with Pomp, you say you unfollowed me? Come on, man.
Guys, please, I'll make Jason, you always do go to permissionless and buy. I'm like, guys, go follow me right now, okay? If you're a bot, I don't care. Just go follow me at Santiago Roel, okay? And then there'll be, I don't know, wink, wink, maybe an airdrop. No, I'm kidding. No airdrop.
That's it. That's the app.
That's it. That's the app, guys. We're not going to talk about anything else other than next time when we tune in, we're going to start who has more followers. Maybe this is just going to become a thing. Whoever has more followers between now and permissionless, whoever wins, I'm calling it now, Jason, if you want to meet me in this kind of competition. Let's see who gets more followers between now and permissionless. And then at permissionless, whoever loses will have to do something like sponsor, like,
what are we betting?
Well, shave their head. Yano, you're already going to shave your head, right?
Shave your head. I'll shave my beard.
Look at Santi's hair. Santi's hair is much more about his hair than anyone does.
I haven't shaved my beard in like 15 years since I was at JP Morgan. Yes, guys, I'm that old. So why don't we do that? Whoever has the least amount of followers, you shave your head, I shave my beard.
That's a horrible bet.
It's a symmetric bet.
That doesn't seem fuzzy.
That's a
It's
horrible bet.
asymmetric.
That's asymmetric.
No one
All right.
said this was an equal playing field.
All right, we'll give it a week. We'll come back. I'm down to make this bet, but we'll think of the bet in the next week. Thanks for listening,
All right.
folks.